Good morning to everybody. And that probably the most important day of February finally came. Today is the 14th of February, the day of publication of United States Consumer Price Index. It's not a secret that inflation is probably a number one driving force at the moment, and especially this kind of economic indicator is driving the currencies as well as other asset markets around the globe. That means that today's United States CPI report should influence to a larger extent than usually, should influence very much and very strong such kind of markets like stock market, stock exchanges, as well as foreign exchange or the market of bonds. And what about today? Probably the most important news is a 15-month low in the dollar yen. The yen is again in strong demand before the publication of ahead of publication of United States CPI numbers, and because the market is very shaky and very fragile, we see the very fragile risk sentiment ahead of this data, because investors still don't know actually what to do in case of better numbers or worse numbers, or if the numbers, for example, will come as the market expected. Some later we will come with a new kind of view, new kind of report, ideas how to trade separate currency pairs depending on the results of the United States Consumer Price Index. But now we try to be more or less short regarding the currencies. You still see that we are long in the euro dollar, and we tightened our stop loss to 122.95 ahead of the United States CPI report. We still short the dollar yen. If there are some of you who saw our last report, our short trade recommendation in the dollar yen from yesterday, which we initiated at 107.65, we still suggest that this kind of pay in case of, for example, upside surprise in their CPI later will come, will receive a kind of another boost to the downside. And let's see some later. Once again, we will discuss this matter. But what about now? We are short in the dollar yen and recommend to be short in other yen crosses like euro yen or sterling yen or some others of them. And you can see in the euro yen that we decided to change our strategy from buying to selling, and now we are sell the euro yen probably a little bit high kind of level of 135.80. But we decided to do this from the point of view of risk reward. For those of you who are more risky, especially ahead of the United States publication of United States inflation data, you can sell at probably lower levels, but that's depending on you, of course. Our recommendation is to be as safe as possible, and I think this is number one in trading the currencies, and only if you follow such kind of recommendation you will be prosperous and you will be lucky, and finally not in red, but you will be in plus. Okay, regarding other pairs, we tightened the stop loss on Australia dollar. We put it just below 200 moving daily line, which today is around 77.55. Let's see this on the daily chart. You can see this. Of course, if we close below the daily moving average, it will mean that the potential to go lower will increase for this pair, but not now, of course. And New Zealand dollar, we decided to buy it closer to the short-term ascending trend line, which today lies around 72.10, and that's why we are ready to buy it at 72.20 with a stop below moving average, once again moving average daily line, which intersects today at 71.52. That's why we put a stop below 71.50. Dollar Canada we sold yesterday at 26.25. We were lucky to do this. Now we again short, but we, as you can see in our strategy report, we moved a stop loss to the entry level at 26.25 because we'd like to be safe after the publication of the United States CPI report. For those of you who don't know how to trade the currencies after the publication of United States inflation numbers, so first of all, we will come with a new fresh report during a day, and also we will come with new ideas after the publication later in the evening. But for those of you who don't know how to trade the dollar after the publication of United States CPI numbers, we advise probably to concentrate on such kind of parent currencies like Euro Yen and Euro Swiss, which could be, let's say, from our point of view, easily to predict where they go in one case or another. For example, for sure we suggest that if the CPI will come in stronger, for example, the Euro Yen will have a kind of potential to extend its current decline, because the stock market should react very sensitively to the inflation numbers. And for sure, if inflation will come in the bigger size, it will mean that the stock market will not collapse, but will go strongly down. And that's all at the moment. Once again, see you some later with a fresh report covering the United States CPI numbers. Wish you a good day ahead, not a critical one for you, but a good one. Have a nice day ahead, and see you later.